Sting. At the Police there, 105.7 Light FM. How do? I'm Dave. We're at 18 here before 9. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. You should do that, and we do it every morning to give you an idea as to what's going on Wall Street with the good auspices of Philip Statler from Statler Financial Services in downtown Sebring. Philip, this is starting to feel like a bad trend. What are we up to? 3 days of declines on the major indexes?
It has been, a little bit of a bumpy ride this week, to say the least. And yesterday was no different, right? It was a pretty wild ride yesterday.
Absolutely. To quantify it for everybody's benefit, we ended up closing with the Dow down another 251 points yesterday. Standard & Poor's off by 80. NASDAQ was off by 486 points. Holy crud, that's a full 2%. And the generation of the thing is, mentioning yesterday, that one of the things that hit is a bunch of the brokerage firms are saying, hey, guys, you got to look at how their results this year compare with what they did last year, which is messing with a whole bunch of industries and sounds a little bit like something you and I have been saying now for about a year and a half. Add to that the fact that 2 or 3 of the major brokerage firms are now calling for the onset of a major correction because they're all of a sudden seeing the AI and tech stocks having multiples that just don't make sense. Philip, are they streaming us up in New York and Wall Street? Because they seem to be listening to what we've been saying for months, don't they?
Finally, right? Finally, somebody's listening. It is one of those things where, earnings aren't keeping up with last year. We'll talk about today, we're finally seeing some misses, right? We're seeing some significant misses, even when it comes to technology. So it's one of those things. You talk about the NASDAQ down over 2% yesterday. The Russell wasn't too far behind it. It was down almost 1.8%, almost $44. So it took a pretty good hit yesterday as well.
Which means the sell-off is not isolated to tech. I mean, we always need to keep in mind now these days, you used to say, well, NASDAQ is where the tech stocks are. The last time I saw the numbers, and this is before the last NVIDIA run-up, like 60% of the capitalization of the Standard & Poor's 500 is tech and tech-related. So, tech drives the market right now on the 3 major index. So the Russell is suddenly looking a lot more interesting as a bellwether, isn't it?
Yeah, it is, Dave. It's becoming, it's broader based, right? We got a lot more stocks in there. And so it gives us a much better picture. Now, granted, there's more mid cap and small caps companies in there as well, but it gives you a better lay of the whole land of what the markets are doing.
Absolutely. Economic reports, because we got a big one out today because it's the only employment report we're likely to get this week. The big payroll service, ADP, estimating what happens with the jobs added in the private economy. And it's about doggone time we got some good news. Relatively good news anyway, as far as employment. They were expecting only a number in the 20s. Ended up with 42,000 new private sector jobs. I got to emphasize that's still an anemic number, but it's nice to actually overachieve something that the market expected, isn't it?
It is. It's maybe helping the markets a little bit this morning, but it was definitely better than last month, right? Last month we lost, according to them, 29,000 jobs. The expectation was to gain 22,000. We actually gained the 42,000. So that was good news on the market front. You asked about the JOLTS report. The JOLTS report is actually put out by the Department of Labor, and I don't think the number came out yesterday. I mean, I went directly to their website, and it's still showing the August number.
Okay, I thought the JOLTS report was privately generated, and we might be able to get some numbers that were supposed to come out of that. No such luck. So
no such luck.
And so we're still flying blind, and so is the Federal Reserve, which just adds one more element to the uncertainty on the market. You put those three elements together, comparing profits to last year, the call from the big brokerage firms saying a correction is likely, and then you get to the point where we don't know what the Sam Hill we're doing because we don't have any data. I'm not sure I'd want to be one of those big billion-dollar investors right now throwing money around on a whim because I really have no data to go on at the moment, right?
No, we don't. I mean, and that's the thing right now is we don't have economic data to really make any judgments on, and so that's really an issue, right? When we start looking at how well is our economy doing? I don't know. We don't see the numbers, so it's hard to judge.
Absolutely. And looking from the reaction of the futures when the ADP report came out, and it comes out pretty early in the morning, it kind of looks like the market's reaction to the ADP report is almost confirming. Yeah, it overachieved, but still 42,000 jobs added in the entire dang country. That's an anemic number of jobs to add in a month, even if it is better than we expected.
It is. It is, Dave. Hey, real quick, let's just talk about
Yeah.
politics for a minute.
Mm-hmm.
The election in New York City has some Miami developers really pushing hard for New York City guys to head south, and they're expecting $100 million of high income earners to be moving out of New York City.
Ooh, I mean, Mondami's entire point of view and what he campaigned on was same thing you hear AOC saying all the time. Same time, tax the rich. Well, if you're a locality and you want to tax the rich ain't stupid. They're going to get out of town.
Exactly.
It's
Exactly.
going to be it's going to be interesting up there. I've got a little bit of an out on a limb prediction that I made to an acquaintance on the email the other day. Now that the elections are over, my bet is that the congressional Democrats no longer need to look like they're holding out in order to motivate the base. I'm betting that we're probably going to be by the end of the week seeing a resolution to this government shutdown. Just a bet, but given the fact that the Democrats kicked butt, everything being relative in the off-year elections yesterday, I think we've got an incentive to settle one way or the other up in Congress, and I'm crossing my fingers on that because we're bumping our nose on the longest government shutdown in history right now.
Yeah, I'm like you. I think by the end of the week, we'll have a vote that says we're going to open back up.
That would be my strongest bet. Talking about things we actually can quantify and talk about, whole bunch of reports are out. I mean, this is one of those floodgate weeks as far as quarterly reports. What caught your eye the biggest this morning?
Well, I think probably, I don't know about biggest, McDonald's really kind of came across because they missed on their earnings and they missed on revenue, Dave. They really missed across the board.
Ooh.
Now it originally put a dent in them. They were originally down about 1%, but they've gained that back now. They're actually up a little over 1% right now.
It does say that they're spending more per visit, which it's a different metric than the top line revenue and profits, but maybe they're making more out of fewer customers now.
I guess maybe. So
All
we
right.
have two technology companies. We got Advanced Micro Devices and Super Microcomputers. Advanced Micro Systems or devices, they actually beat by about 4 cents a share, revenue ahead of expectations. However, they gave some margin guidance that actually was in line with the estimates, but that's not good enough. You got to do better than what the estimate was.
If you're
That's
tech,
not,
you got to slay. That's all there is to
yeah.
it.
They're trading down 1.9%. They were down as much as 5% earlier this morning. And if we look at Super Microcomputers,
Mm-hmm.
their first fiscal quarter, they missed by 5 cents a share, came in at 35 cents a share, missed on revenue by almost $1 billion. Um, they are trading down 7.5% this morning.
Ooh.
Yeah.
Hearing
Um,
the high tech firms getting slammed, like I said, right in the face of the big brokerage firms saying they're overpriced to begin with. I got to believe a 1% drop today is going to be amplified up to a 3% drop just to make the point, isn't it?
Yeah, I mean, I think we're looking at that as an issue. Pinterest reported weaker than expected guidance. They also missed on earnings by about 4 cents a share, came in at 38 cents. Revenue was in line with expectations, but again, guidance is kind of hurting them this morning. They're down almost 18.5%.
Ooh, and you're not even saying that's your biggest loser of the day.
Well, that may be close. I'm trying to see if there's anything any bigger than that right now. I think that's probably the biggest. The
Sure.
last one I have for you is Humana,
Uh-huh.
the health insurance company. They reported lower third quarter profits. They cut their full year guidance as well, citing medical costs are continuing to rise ahead of even faster than inflation. They're down 4.3% this morning.
I didn't really read the specifics on the big beautiful bill as far as Medicare reimbursements, but it sure sounds like the reimbursement formula they're using out of that reconciliation bill is not helping any of the Medicare-based insurance firms.
Well, yeah, I think that's, one of the big things in that bill was the lack of coverage for, you know, immigrants, illegal immigrants, because that's what comes through the ERs
Hmm.
and the hospitals. I think it's going to limit their reimbursements
Yeah,
on
which is
those
prompting,
patients.
yeah, and that's prompting the hospitals to raise the price and be firmer on negotiations on the things the insurance companies are stuck paying because they got to make up the difference somewhere if they're living on the
Yep.
emergency room outflow. It's
Yep.
not a pretty sight at the moment. Someday some genius is going to figure out a way to fix this mess, and I'm not smart enough. Resetting the table, well, I don't know anybody that is either. Resetting the table, off day yesterday on the indexes, and I'm not hearing a lot of good news this morning. 45 minutes before reopening, what's happening?
Well, at least right now, Dave, we've got a slight green tint to the futures market. And it doesn't mean that's what they'll open at, but the futures are slightly up. The Dow's up $50, about 15/100ths. The S&P 500 is up a tenth of a percent. NASDAQ 100 is up 12/100ths, and the Russell 2000 is up a little over 2/10 of a percent. On the other side of the coin, we got silver still down, up 1.1 from the close yesterday, but at $47.80 an ounce. Gold, same thing. It's been down. It's up 70.7 tenths of a percent right now, but still $3,988 an ounce. Crude oil down a half a percent this morning to $60.28 a barrel.
Which is pretty close to where it was yesterday morning. Maybe we're seeing some stability for a change. Across the ponds, we got kind of a tale of different cities in the process. They're either way up or way down. South Korea and the Asian Rim down by darn near 3% this morning, but on balance, it was a pretty good day. The mainland Chinese markets were up slightly. In Europe, the same thing, tale of two cities. Germany off by quite a bit, France off by quite a bit, but the average European index is only down fractionally halfway through their day because most of the rest of the markets are actually green. Getting my retirement together to know what to do to make retirement plans out of dreams, that takes your eyes to help me. Philip, how do I find you to make it happen?
Dave, then give us a call at 863-382-0037 to schedule a 30-minute phone conversation to make sure that they're on the right path to the retirement they dreamed of. And then check out the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM.
And you and me back again tomorrow morning about the same time. I will see you then, my friend.
All right, buddy. Take care.
Thank you. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Hey, folks, again, I want to thank you for joining us today. Have a great day. I look forward to speaking to you next week. Bye now.